This is the Tesla Beat podcast, week 19. We have our regular guest, the Jeff Lutz, and Joe from San Joaquin Valley, hashtag the Prez. We're obviously missing one of our other counterparts. She could not make it this week, so we hope to see her next week. But we have a special guest. You may know her as the Tesla Boomer Mama or Tesla Boomer Mama. And she actually just recently started the Boomer House, or if there's,
True.
which is an organization. You'll probably see these like little red little badges on everyone's X for those that are joining. Well, awesome, Alexandra. Thank you so much for joining us.
Thanks for having me.
Yeah, well, we're excited to have you, and we're excited to just kind of get into all of the latest Tesla news. So let's just jump into it and go from there. So as you know, we always look at Tesla stock, just quick update on how things are going, where things have been. And as we know, it's really gotten soft over the past several weeks. Again, I can't speak for Alexandra, but for us, we are long-term investors and always not necessarily looking at the day-to-day. So it's about 241. I think year to date, it's at 124% year to date. But for the past 6 months, it's only 24%.
I'm long term, and I do look at it every day. I think there was a question on Twitter, like, when was the last time you didn't look at Tesla stock for a week? I think my answer was 2012. I do think what's happening here is, and if you look at, there's data on this. If you look at the trading days in August, they're fairly low volume for Tesla. They're about 25% lower than the 3-month average. And so you've got some low volume consolidation occurring. It's definitely to the downside. There's no question about it. But there's definitely consolidation occurring, and consolidation isn't necessarily a bad thing when a stock has moved rapidly, in a short period of time, which would be, this year, essentially doubling.
Yeah, and I guess partially what I meant a little bit by, we don't check it every day. It's not just one of those things where, we're not going to be moved by, what happens on a daily basis. But definitely thanks for that clarification, Jeff, as we, it's important to make sure we obviously represent everyone, especially as I'm speaking. So, all right, let's just jump into this. I think probably the biggest news that broke this week was obviously was Zach Kirkhorn, who has been at Tesla for 13 years. He's been the CFO for, I believe, for the past 3 or 4 years. And so, he is stepping down, and there is a person named Vaibhav that will be stepping into his place, who was the chief accounting officer. And so, a lot of people were just chiming in this past week. But I would love to I know everyone's kind of been talking about this week, but I would love to get your take, everyone's take on, how they think this could impact Tesla, whether it's going to be positive or negative. Or were they shocked even by this news? But maybe Alexandra, we can kick it to you since you're our special guest.
Thank you. I don't think it has any impact at all, honestly. It would have had an impact if this was linked to any scandal or accounting. And I know Tesla Q tried to frame it that way, but what surprise is there? The fact that he is replaced by the former chief accounting officer, who remains chief accounting officer, who's been on his sides for years and years and years. All the time that Zach was CFO, Vaibhav was a CAO, and now he's taking on both roles. I'm sure they're going to find somebody moving up into the accounting role, and him only being CFO. Also, it's not a temporary nomination; it's straight away a permanent one. So this is not concerning at all. I think this is much more personal reasons. He's had it, maybe money-wise he's had it, maybe in his private life he needs, just recuperate. I do believe working at Tesla must be the most, the toughest job there's out there, and especially in this role. I liked Zach a lot. I loved his calm demeanor in the earnings calls. You all know that I wish those earnings calls would be less emotional as they are, because the audience of these earnings calls can't deal with Elon and his emotions. So I found Zach did those perfectly well. We'll see in the next one how they will be done by YDEF, and then we will just move on. This, it's already forgotten today, I feel. I know it was Monday, but Friday, it's like...
Yeah, I can agree with that. I would say that for me, I just remember when Deepak left, everybody was like, "Who the heck is this Kirkhorn guy?" And nobody liked him, and there was all the FUD around that whole thing. And so I think this dissipated a lot quickly than that did when he first took over, which is actually kind of surprising to me. I don't foresee the stock really taking a hit because of it. Just for the simple fact of, like you say, Alexandra, he was a stern person. It doesn't seem to be like any type of fallout from anything, and there was no bad blood or anything. Like I can't see it really being a bad needle mover. People can make this mistake if they want to, like they did when in early January when everybody was calling for Elon Musk's head, right? And now here we are in freaking August, and it's like, what? That happened? But but I think people can make the mistake of categorizing people as factors for the stock to do this or that. You know what I mean? They did the same thing when I can't even remember his name now, but the head of the FSD when he left. You know what I mean? Like, these people are not
Karpathy.
Yeah, Karpathy. Yeah, these people are not the end all be all. The company is still doing what it's doing, and people kind of really, they have a problem differentiating that it's a business from the people associated with the business. They do it all the time with Elon. Oh, Elon did this. Oh, the stock's going to do X. You know what I mean? And it's like, no, it's not. It doesn't work like that. You don't like Elon, but it doesn't change the fact that the company is still freaking producing these vehicles more than anybody per quarter. And even though, like, I keep hearing all this talk about how terrible the sales are for S and X, and it's one of those things that even at those staggeringly low numbers, they're still beating out pretty much everybody who's selling battery EVs across the globe besides BYD. Like, nobody's even moving 20,000 units per quarter. Like, it's crazy to me. So yeah, I think the company will be fine.
Yeah, I like the points, Alexander and Joe. Just picking up on a few of them. When the last CFO left, I think the stock was down 4.5% that day. That was 2019. But if you look at the stock overall over that last 4 years, obviously it's made a tremendous move. But back then, that was the end of the world. There's something going on. There's an accounting issue, or he sees the future. He doesn't like it. All those things occur. And what I would just say, and again, from being in a management position before, people leave. There's reasons. They could be personal. They could be professional. But he certainly had a long and very successful career. He kind of shepherded the growth from a financial perspective and oversight perspective of I think the company went from 50 or 60 billion in market cap to near 800 billion where it is today. So he's obviously had a very successful career. And sometimes people just need a break to recharge and figure out what's next. I do think there's probably something next based on if you read, Elon's tweets, and there's probably is something next. But we won't know exactly what happened here for some period of time. And again, it wasn't like Tesla was trying to conceal this. They announced it at 8 a.m. on Monday morning, 20 minutes before trading. So it's not like they were trying to bury this on Friday after hours. So I think he had a great career at the company. And just this happens, like people leave. At some point we may know why. At some point we may never know why. But the nice thing about Tesla is, Elon has been the head. He's been the CEO of the company for, over 12, 13, 14, 15 years. And basically during that entire time, he's been hiring people in his likeness over that whole period, both building his team out, and then his team is building the team below him. So I think they've got incredible bench strength, and that showed on Investor Day. So if you put all those pieces together, I think they've built something that, they have a fortress balance sheet. They're approaching that, and they're also, I think they have a fortress team that they've built, and they'll get through this, and they'll continue to prosper. I'm very confident in it.
Yeah, no, I think all three of you made like just a really, really great points. My personal take is obviously it's a bummer to lose any great leader, especially I think Tesla has a deep bench. And I think, Jeff, you were hitting on this too. It's more of, Elon, he drives and causes certain types of people to come to Tesla. And that is very, very apparent. And, at Investor Day, when you were able to see the full exec lineup, you can tell that people are passionate. They work extremely hard. And the people below them and the people below them, like even all the way down the actual chart, like of hierarchies and reporting, it's lean, but it's also very tough, and people are there to work. And I think that even as you are talking about, the X lineup that of the X employees that are there, you can just tell, obviously there's been 80% of the people that have been shed, but even the people that are there are just even more hungry than ever to help innovate and build. And that's the type of, employees that Elon brings. And not only does he bring those type of employees that want to work hard, but he brings the brightest and smartest people. I remember being at Electrify Expo, and I met a person there, and it was just no big deal. Like, they're just talking, and it's like, oh yeah, I went to MIT. Oh yeah, I went to Harvard. It's just, people forget that outside of SpaceX, and Tesla's really number two, it's harder to get into SpaceX and even Tesla really than it is Harvard. And so I would agree with all of those sentiments. I think, people work hard. And also too, Zach has made a lot of money. I think when I interviewed Elon, one of the things he said is that, a lot of his friends and a lot of the people that he started this company with and everything, they're all very well off now. And so, when you work at Tesla, when you work 1 year, you're working like 3 or 4 years. It's really maybe even 5. It's really a lot happening all at once. And so it makes sense when there's transitions. And I think obviously it's going to be a bummer to see Zach leave. But, I know that Vaibhav and whoever is coming in next, which is Vaibhav, is just going to do a great job because they've already been running with the same ruthlessness. And I believe Vaibhav has been there a long time as well. And so actually, which leads me into my next slide. Which is right here. I believe, he's been already at Tesla for about 7 years. And then he was at Solar City before that for another year. So if you just talk in all in Tesla, I mean, you're talking almost 8 years. And then PwC, and being at PwC, even that is not an easy job. So Vaibhav literally comes from a very hardworking background. So yeah, I think this is just going to happen. This is just the natural progression, especially as a company is successful, right? Like there's going to, people have their own, personal journeys and personal stories of like what they're ultimately looking for, what's going to bring them to their goals. And, I believe someone was saying he's got like a net worth of 600 million. And he was there during the days when, Tesla was literally falling off. Obviously we've seen the companies like night and day from what it was 4 years ago. But yeah, that's just some background, at least again, my personal take. But anyone,
can I add something here, if you don't mind?
Please.
So when he was at PricewaterhouseCoopers, he was also already in charge of Tesla. So he knew the company as an auditor when he then moved on to Solar City in that very particular moment when Solar City was going to be taken over by Tesla, which was accounting-wise very complicated, right? Integrating Solar City at that moment into Tesla was a not an easy feast, because you needed to make sure we had all these lawsuits pending that this was as stellarly done as possible, and all these lawsuits were won, right? And then he moved on becoming CAO at Tesla. parallel to Zach. So, I mean, this was a team that was in place and worked together. And I always like to add that Robin Denholm, who is the chair of the board, also comes from this path of life. She's also a finance person. So from all sides, I feel really reassured about financing and finances and accounting at Tesla. And the second thing I want to add is the fact that Vybar is Indian, I think, is in this very particular moment actually a plus. You know that Tesla is making big moves into India, and I do believe more we have on that board of people that know India, that know the culture, that know how to deal in India, better we are off.
Definitely. Yeah. Thanks, Alexandra, for that input. And I didn't, there was, some of that context of, the Solar City to Tesla transition. I know that was a huge thing to overcome and to make happen. And obviously there was a bunch of people at the time asking, like, why are you essentially acquiring a sinking boat and all that other stuff? So for him to go through that, there's tons of history there. So couldn't be more excited about Vybov, like just coming in and stuff. Some other breaking news this week. I know there's been some delays here, but the fact that Giga Mexico is now, there's I believe some footage or screenshots or like photos of just initial construction machinery spotted on site. So big news, because again, this is really the next new gigafactory like underway. But I don't know if anyone wants to just chime in on like what we can expect over the next 3 to 6 months, even year, especially as we know the Tesla speed that they ramp at. But I think, what could this even mean, obviously, to especially to the future products with the Gen 3 platform and stuff?
The quick thing I would just say is that there's a lot of leverage that occurs in these negotiations, but both with governments and with private entities before you break ground. So this appears to be delayed from previous, at least a previous understanding. I'm not sure if there's ever been a formal schedule published on this, but you get a lot of leverage before you break ground, and then once you break ground, then based on the parties you're dealing with, that can change significantly. So my guess is that there's a number of things going on, from permitting to just negotiations. Could be tax related, could be a number of different things. We're just all speculating here. But now that it's getting closer, I'd be looking forward to hearing more of a formal announcement from Tesla. It probably would be just like, hey, all of a sudden a live stream pops up and they're breaking ground. And then I would look for an accelerated build out. Reminder, Tesla is their own in-house construction team, and they have goals and KPIs to be better and faster than the previous generation that they've done before. And my guess is there's a lot of pressure to be faster.
Just from a communications point, I would like to add, I would have liked a real formal groundbreaking. I think one of the reasons the stock is sliding a bit is there's currently no news, right? We're all waiting for the specs and the prices for the Cybertruck and the date, the delivery date. So I think this breaking ground in Mexico could have made a nice little entertainment, but well, here we are. So I'm not sure this is already officially groundbreaking or not. Could be that there's something, still coming up. I would have been nice to use that because it's going to be a very important factory for Tesla. This Mexico factory, I mean, I know we all know Austin and Fremont and Berlin and Shanghai, but Mexico is going to be very important.
Yeah, I think I don't think this is the official groundbreaking, because the Earth movers were even in Giga Texas and in Corpus Christi before they did the official ceremony. So I think we'll be fine. But it would have been great to have something else this week with all the other news, something to help boost the numbers a little bit. Yeah.
Yeah, I definitely think they'll have an official groundbreaking. They're probably maybe even moving some dirt. But yeah, I think probably if they're really, again, bringing more machinery out there to actually start like working and stuff, I definitely think that they'll probably have some type of official announcement. I would assume Elon would probably even go out there for an open ceremony, like, or groundbreaking. But ultimately, we'll see what happens. But I'm really excited for what this means. I mean, we're just getting even that much closer to having a groundbreaking event, or more importantly, building this factory. Just because I think it's Jeff and Amy are the ones that you want to see what Tesla's up to. You just got to follow their supply chain, and building another gigafactory is obviously the key there. And it's going to be very strategic location, because so many of their suppliers are already out there. And so for them to do this and potentially build the next gen 3 platform, or even the compact car, is going to be a huge win and very exciting, along with potentially even megapacks and everything else that they'll do. So yeah, couldn't be more excited about that. Jeff, were you going to say something? Okay. Well, on this one, actually, I think this is you. Do you want to kick us off on the US EV adoption rapidly increasing?
Yeah, and is my audio okay?
Yeah, it's good.
Oh, okay. Yeah, this has been coming up in a number of conversations, and it's actually started on the FUD side of, hey, it looks like there's some EV remorse. There's inventory building up of Tesla competitive cars. And I even I posted about this. I'll probably post another fun one today about CNBC. But essentially, the kind of the FUD piece of this, especially with the oil industry and with legacy auto, is like, hey, maybe maybe people don't like these as much. They're buying them, they're bringing them back, and maybe there's something to that. Maybe there's this EV remorse thing. And when I saw this stat, and by the way, to CNBC's credit, this was on their show. They just, again, their points of view are so disaggregated. They're all over the place. But the takeaway here is, last year, the U.S. estimated EV adoption rate was somewhere between 4.5% and 5% of all cars sold. And right now, this is data from JD Power, actual sales data from July, and it's showing that 8.5% EVs were purchased. So that would indicate roughly a 60% growth year on year. And now this is 1 month. We should look at it in multiple months. I think in the first quarter of the year, it was called somewhere between 6.25% and 7%. That was the first quarter. This is a data point from the second quarter. I haven't seen a formal full second quarter data point, but if you start kind of stitching these themes together, EV adoption is continuing to grow in the US and abroad. And to me, that is the magnet that pulls that pulls this whole story forward and up and to the right, is EV adoption. And as long as that continues, and it seems like it's not only continuing, but it could potentially be accelerating. I think that's a key takeaway. That was one of the key takeaway stats I had for the whole week, was seeing that data point.
Yeah, I'm pretty sure we've all seen the video where the speaker, I can't remember his name now, I don't know why, but he showed the horse in carriage in 1 year in the early 1900s, and then just a few short years later, it was like all cars. And so, and I think people have always misjudged the rapid acceleration of EV adoption, just like with TVs. Remember when TVs first came out, the flat screen TVs, the plasmas were like 20 grand. And people were like, oh, that's crazy. And now you can buy one at Walmart, freaking a 60-inch for like $500. So, and I think people forget technology advances so quickly, especially now we're dealing with a vehicle that's like so much tech in it that, I mean, this is just going to evolve rapidly. And we're seeing that in these numbers that you have there, Jeff. It's just like, it's really staggering that people don't get it. And it's so wild that just a few short years ago, it was like, oh, this will never happen. It's less than 1% of the of the overall US market. And now it's like just a few short years later, it's like we're talking like almost 9%. It's like, what are you going to say for the next like 5 years? It's, you know what I mean? Oh, it's not even 20%. Like, you know what I mean? Like the FUD just is ridiculous.
Oh, for a second. Yeah, go for it, Alexander. I thought you were going to talk.
I'm ready. I had the mic not unmuted. That's why it took me a second. Actually, you guys in the Bay Area obviously see it much more, and us in Santa Barbara as well. I think here in Santa Barbara, 1 new car out of 2 is a Tesla. There are just so many. You can't get to any intersection anymore without having another Tesla there, if not 2 or 3. Jeff, you're in the Chicago area. I'm not sure whether there it's already as pronounced, but we had some people coming over from the East Coast for Tesla takeover, and they were, really surprised driving on the 101 or whatever, how many Teslas there were out there. And of course, if you wait for the competitors in America to be there to help, there's not much help yet, that's for sure. But just from the scope of the Teslas you see in the street, it's evident the impact this has, and it will nationwide.
Yeah, when I first started driving a Tesla in the Midwest in 2013, I would go a day or two being the only EV or Tesla on the road. And then the Tesla wave was a big thing. It'd be very rare to actually drive by somebody in a Tesla. And I will tell you today, I can't go even in the suburbs, I can't go on a drive without seeing 4 or 5 of them or more. They're everywhere. So it's coming out here. It's a period of time. But yeah, this EV adoption number, to me, and if you look at that rate of growth being over, let's say it's even 50% or 40%. The biggest drawdown in the US auto market in the last 20 years was when we had the Great Recession in 2008, 2009. And that drawdown in total US SAR was 16% in the first year and 36% by that second year, in 2009. And that was the biggest drawdown, and the market was 36%. So if you're in this pocket that's growing 50, 60%, or even 40%, the point is that that's acting like a magnet, and that will give EVs escape velocity, even if there is a slowdown, formal recession or not. Even if there is a slowdown, that rate of growth is very promising. And again, this goes back to kind of the Tesla strategy of what they're doing on pricing, why they're trying to drive their utilization rates higher to keep their cost structure low. So if you kind of put all this together, I think Tesla acted at the right time in the first half. I think it was very controversial in terms of how much and how fast they moved on pricing, but you can see it's stabilized. We're in August now, and there hasn't been a major configurator price move since April, except there's just been a couple of increases actually in May. I'm speaking most of the U.S. market, but really abroad, there's been very few moves. So I think they made the right move. It's helping with EV adoption. The other like legacy EVs, that inventory building, is they have product that's at a price point that's not desirable, and they have performance, quite frankly, that's not desirable at those price points. So why is a consumer going to buy a Cadillac Lyriq at $65,000 when there's a Model Y equivalent in the 40s? So that's just straight up math. That's how real people think and go and buy and shop for cars. So same thing with the Polestar SUV equivalents. It's $80,000. None of these are in real supply. So to me, it's all kind of fitting together, and I'm be interested to talk about what's coming up in Q3 and Q4.
Yeah, I would agree with the sentiment. Alexandra, you're in Santa Barbara, so still California, and Jeff, you're in Illinois area, and I think it's very, very apparent that I think the average cost for a brand new vehicle is roughly $47,000. Obviously, with the biggest market being like the small SUV, which is the Model Y. And I think as more and more people are informed, and this is partially why Tesla is stepping into this advertising, I think they're running some Google ads. Who knows? Maybe they'll start running some X ads at some point. But, it's really informing the base of people that are outside of its current base. So it's the people that just don't understand why you should buy a Tesla, that it's more affordable. Its cost per mile is cheaper than a Toyota Corolla. And the maintenance on it is practically zero. And I think once you start stacking up all of those reasons for why you should buy a Tesla, it's no longer about buying the coolest car. Even though kids know, you talk to any kid, they're like, what car do you want to have when you grow up? They all say Tesla. They're not saying the Porsche Taycan. They're not saying a Ford Lightning. They all want to drive a Tesla. They know that that's the future. But when you add in, you get you get rid of the cool factor, but you just start layering in the basic economics of owning a Model Y or owning a Model 3. And when you start just layering in that there's no maintenance, and that, again, these cars are built tough. They're built to be the safest cars on the planet. It just becomes an easier and easier decision. It's just the biggest thing is about informing people. And I think, as we're seeing this in this insane rate of increase for EV adoption, I think we'll continue to see that, especially as more OEMs obviously put out EVs. And especially as more EVs come out, people are going to compare that to Tesla, because Tesla is now the gold standard. And I think that actually, in a lot of cases, people, because the great thing about buying a Tesla too is you don't have to haggle with the dealership. You don't have to haggle with a person. You can just go online and just see what the price is. And so as you go and you look at, the Cadillac Escalade and some of these other ones, sure, it's even bigger than the Model X, but you're just really gonna start to weigh, like, is this worth it? Should I go and grab something else? And even now, right, imagine a 200 kilowatt battery and you're trying to charge that. Again, I have no idea, even if it's going up to hitting, certain points of 350 kilowatts. It'll be really interesting to see, like, how long does that actually charge? And again, Tesla will be opening up their network, already has, but as they continue to, I think that will help to ease. But again, you're talking a lot of these companies that are putting out these big, SUVs are putting out huge batteries on the bottom of them because they haven't optimized for efficiency yet. But I think the general population is going to continue to just become more and more aware. Obviously, Tesla has to do their work, as they have been probably in the past 2 or 3 months, just putting out basic information and hopefully starting to advertise. But I hope to see that this rate will continue to increase, and because it's no longer about buying the coolest car. It's about buying the safest car. It's about buying the cheapest cost of ownership car. It's about buying, something that is going to be really good for you in the long run. And so I think that, all of those things factored together are really going to help Tesla perform in the long term, especially as we either come out, or whatever you want to call this. It's not a recession, it's a recession. But all of those price cuts, even that Jeff was alluding to, like it, as Joe would say, it's like, it's really those chess moves. It's like everyone was pissed, like, oh man, like my Tesla just went down in value again. It's like, and then here we are in August, and we're seeing like they move those prices down because they knew that maybe it's going to be, during August time, and, some of these other times where, rates are kind of still increasing or still high, that the cost has to come down to at least offset and keep inventory moving versus, making their sales and service centers a parking lot. So, and they can't optimize for that because of their insane margins that they have, which is unseen in the automotive industry. So sorry for that long rant, but all of you just brought together a lot of really cool thoughts. So Alexandra, I'm going to put you on the spot as we transition into something you tweeted.
Oh, yes. I love this one.
Maybe you could break this down for us in layman's terms and just kind of talk about even some of the work that you've done and even what this means for Tesla.
Sure. So most of you know I've been senior vice president at Moody's from 1998 to 2003, about that time. So a long time ago, 20 years ago. So I know this rating field quite well. And I've done quite a lot of work on the scam of ESG ratings by these rating agencies. It's just, it's greenwashing. It's stupid. It's designed to game the system for monetary gain, meaning they're putting these ESG ratings out there, which are actually necessary. It gives people, like, for example, GM is a big user of ESG ratings. It gives them cheaper access to the capital markets. If they need funding with their ESG scores, they can get better fundings than with their credit ratings because their credit ratings are so bad. The rating agencies both rating agencies, S&P and Moody's, were obviously very happy to have another horse in the race. There are many other players in the ESG game as well. Then you had an agency that rates the other rating agency. It's a huge gravy train. And so the first one to finally give up is S&P Global. So this isn't the only major one. The bigger one is MSCI at the moment, and there's one called Sustainability. But it is probably the most well-known. So S&P announced this week that they are adding their ESG scores to their traditional debt ratings. And people are already speculating that means they're actually canning the whole product. Not so quick. You have to. I wish that would be true, but I mean, it's a very good first step, because at least what was happening is this ESG score became part of the debt rating analysis, and that was obviously a real cancer, because since that part, both parts are not really good, but it was infecting at least something that you could numerically understand with something that was just completely biased and influenceable. So this is a good first step. It's not the end of ESG. I wish it would be. The major danger for ESG comes from the fact that governments want to install these now in all financial reportings. And I think that is really the big problem. And I hope more people get sensitive to that. As soon as we have more news from that, because they're working really behind the scenes and working hard and long hours, because what they want to do is they want to oblige worldwide that financial reporting includes ESG. And once that's done, there is no going back whether S&P puts them into their debt ratings or not. So there are currently quite a couple of forces on this. And I think that is still as going on as it was a couple of weeks and months ago. But it is a good, encouraging first development and had to be applauded.
How do you, maybe you hit on it a little bit, but how do you think this will impact or not impact the Tesla stock? Like, do you think it's going to be positive, negative? What's your thoughts on that?
This part by S&P didn't have any impact anymore. What happened with S&P is last year in May 2022, they kicked Tesla out of the ESG index. You probably remember that. It was absolutely ridiculous because they felt that stakeholder analysis, meaning the press and all that, said so many negative things about Tesla that they were not worthy to be in the index. It just shows the whole shenanigan going on, right? So, and then they realized what a mistake it was, because everybody was just telling them, this is crazy. You can't do that. But it was done. And then this year came the annual update, and surprise, surprise, they did it already in April when nobody was looking yet. And without any further ado, they put Tesla back into the index. You had to really search for the index composition to suddenly see Tesla reappear in it. Nothing was majorly made out of it. Nobody talked about it, no press, whatever. So, and I think that's just showing how manipulative they are being and how stupid that was. So what happened when they were kicked out in May 2022, funds that were indexed on this S&P index had to sell Tesla, right? Because suddenly in the index, there were not anymore. What happened this year in April, since it was so low, is that all these funds actually changed of index, because S&P was so ridiculous they just all said, okay, we're not indexing our fund to S&P whatever ESG anymore. We're now indexing it to MSCI ESG or whatever. So the fact that it got reintegrated this year in April had hardly any impact. And the fact that they are now taking it out of the debt is good to have. It's really good to have, but it's not helping the stock in any way. Why does it not help the stock? Because Tesla has no debt. This helps companies that had a debt rating with a bad ESG score, but that is not Tesla's case. Tesla doesn't need any, whatever. And the debt rating from Tesla is too negative already because they don't want to. No, let's call it what it is. Tesla doesn't pay for these ratings, so they get barely what they deserve, the debt rating. But since they don't need it, Elon doesn't care. And the market has understood Tesla as AAA for a long time, even if those rating agencies haven't understood it.
Wow, that was very illuminating.
Yeah, it was just, Jeff, you want to go?
No, I was saying that was great. Appreciate all the insight, Alexandra.
Yeah, no, I think it's really helpful, especially because I do remember that now that you mentioned it, and I think that's what even when I believe it was Amy who mentioned that we should include this, and I remember obviously them being kicked out, but I think you spelled it out really nicely to just like how we can understand it from a basic form, and not necessarily the conspiracies, but just like everything else Tesla is involved in. Just how not only they overlooked, but as you said, just get the bare minimum as they obviously get back into the ESG. And as you said, you had to scroll through pages and pages to finally find them back in it. But all that to say is it's really interesting how even now as Tesla has become, even I think they're probably one of the world's strongest brands. Right now, I think they may have even toppled Apple at one point. But just that, Tesla continues to disrupt the industry and people are doing whatever they can, even from a stock perspective, to keep them down and out. So, so just very, very insightful information there. So thank you for that.
Yeah, it's always interesting because as far as investing goes, Tesla's always been an enigma, which really doesn't fit into any boxes, even though people try to make it, but it just truly keeps proving to be the enigma that it is.
Yeah, nothing comes ever easy. That's for sure. It's always a little bit more difficult for Tesla. But one thing that always gives me comfort is people who understand ESG, who really, want to do the research and understand all that. They have the impact report of Tesla, which is the best reporting possible. I mean, I've never seen anything even halfway comparable than the impact report of Tesla. And so they've taken the high road, saying, what the heck, all with your scoring models and all your letters and number combinations. We're not playing this game. You do with us what you want. We're putting out every year the impact report, and that's it. And that's just it, stuffing it to them like always. And that's the only way to do it.
Yeah, no, it's the very Tesla way. I think it's one of those things where there's a lot of noise a lot of times, but they are focused on where they're headed, not, and I guess the word would be signal. They focus on the signal of like where they're going and the signals of like, are they getting to those points versus, just a bunch of people just yelling a bunch of stuff as they're headed down this road. And I think that being able to ignore a lot of this, this extra noise that's really just not needed. And for, as maybe some people would call dumb ratings, it really just doesn't matter in the grand scheme of things. But interesting to see that obviously they're back in it. So, all right. So jumping into some other news, this is just, kind of more fun, but it sounds like Tesla, it's really funny. I feel like this has been the year that Tesla's defense team, and, from a lawsuit perspective, like their lawyers have just been killing it on every front. I mean, from the 420 funding to this to just, a bunch of other cases. I don't think I've seen so many cases just being won out in Tesla's history than this year. And part of it's probably because, a lot of them have been building up, but, people are obviously going to go after companies like Tesla and, for Tesla beer and some of the other stuff that they're doing. So this is more of just like kind of like a funny, a funny clip of news.
Yeah, there's also the Tesla the Tesla used dealership too that got hit with a lawsuit they won as well. Like these were back to back. Yeah, it was pretty crazy.
In the next slide, Joe, I'll kick it to you. I don't know if you want to hit on this one. Las Vegas mega pack.
What's interesting about that is Matt Wallace went out yesterday and it's not there. Like yeah, it's disappeared overnight. So it was there, and the people were making videos and doing whatever, and then Tesla came out and moved it someplace else to where I guess people don't know where it is. But yeah, Matt Wallace lives in Vegas, so he went out there and he was like, it's gone. So I don't know what they did with it, but
never mind. So this is not fake news, but disappearing.
I mean, they're still doing the mega chargers. Because they're trying to put mega chargers all the way down through to Texas because they have this route coming from Mexico, not Leon, but there's another part of Mexico where they have shipments come through. I know Jeff could speak to that. And so as that route comes up and also goes back down from Nevada, they're trying to place these strategic mega chargers in places that are like 300 to 400 miles. You know what I mean? Like within their travel distance. And they know with that Pepsi video, I mean, they know that with the weight they can do this, and even with less weight they can go further. So I'm pretty sure they've got it all figured out. But yeah, I mean, it exists and it's happening. But yeah, they moved it somewhere else in Vegas.
Some of the other stuff that's just happening in the Tesla news, more superchargers V4 are being installed in Germany. So I think Esther had a tweet, just more superchargers being updated from V3 to V4. If you actually watch in the video, I think they showed all the old ones being essentially put to the side and the new ones being installed. Hopefully they make an announcement in the US. I'm feeling like major FOMO because it's like, I want to see these things, seeing, the amount of, kilowatts or the charge rate just hitting 350 kilowatts or whatever the number is. Because once you start doing that, I mean, again, to be able to charge at quick rates is just going to be an absolute game changer. But, they started in Europe, which is awesome. And so hopefully, in the US, we can see some of these.
You know what I think is interesting is that I wasn't expecting this, but for them to remove the old ones and, you know what I mean? Like because I mean, we know in California, you can find like these areas where these, that level 2.5 or whatever, the 72 kilowatt hour ones that look like this, but they're really smaller. Like they're all over the Bay and in California. But I really thought they were just going to add additional chargers. I didn't know they were going to take away the V3s and then put in the V4s. That's kind of surprising to me that they did this in Germany, which is why I wanted to add this to the slide, because I was like really shocked by that. I thought they would just add chargers, not like keep the same amount, but just make it more powerful. It's just very interesting.
Yeah, maybe we could even get Jeff to chime in real quick on that one, because I think it was actually Brandon Tesla Flex who was going through the Mojave supercharger. And he posted a video on TikTok where that supercharger had 72 kilowatt, 150 and 250.
Yeah.
And so it's just one of those things where, they're not removing all of the old ones, right? Sorry if I'm lagging. I'm noticing I'm lagging a little bit here.
You're still you, John.
But yeah, Jeff, I don't know if, when you've seen maybe in your previous life, just, as you upgrade technologies, whether it's in the supply chain or even some of the manufacturing stuff, like what's the process to rip out, or how do companies go through and make the decisions to keep or remove old equipment?
Yeah, you do a kind of a multi-year benefit analysis, and you try to understand it both from the consumer, and you also try to understand it from the economics internal to your company, and you make a decision accordingly. I think with fixed assets, you obviously want to extend life as much as possible and get as much meaningful usage out of them. And if there's an experience that still aligns with your consumer base, you keep the asset going. But if you can meaningfully improve it and even get greater utilization as a result of faster charging, then maybe you would upgrade it. So yeah, it's a number of factors. When I plug into something under 100 kilowatts, it's not the greatest experience. I'd have to almost be gone for a few hours, for it to be meaningful. The other thing, just back to the point of the mega charger locations, Tesla is always thinking multiple years in advance. So, if you look at what happened during COVID and you look at what happened with freight and rates and the explosion both in fuel cost and then just trucking and the labor in trucking and then the physical trucks themselves, everything was just exploded. And Tesla bore the brunt of that, as other companies did as well. And, they started, they've been using the semi between Nevada and Fremont for a long time. And just think about the economics of this as more of these get on the road and they can use their own product, use electricity to go from point A to point B. Just think of the economics of them being able to move product and material back and forth, and then transplant those economics to other companies that do the same thing that Tesla does. And you'll find that they continue to add these pieces to their unit economics puzzle that take their cost structure down that others simply can't do.
Yeah, one thing to add to that also is at the Megapack facility here in like 10 minutes from me. The yard is filled with Megapacks that are being shipped out, and I noticed that even at the Fireball location and some of the other locations, they started adding battery packs as well as solar to those superchargers. So you start adding that to mega packs and stuff like that, then you can put them wherever you want at that point, because you're just really off the grid charging your vehicles and using that battery.
That's right.
Definitely. Well, those were all of the major things that we had. And
can I add something? Do you mind if I interrupt you?
Yes, go ahead.
I just want to give a shout out to Linda, who was on CNBC yesterday. I think she did a tremendous job. These journalists don't like anything that comes close to Elon. And I think she was very good at defending Elon while standing her grounds. Absolutely loved it. And I think it deserves all our praise.
Yeah, I was going to watch that today. I was really looking forward to it. And I got caught up with actual 9 to 5 business. But yeah, I'm going to watch that today, because I was really, really looking forward to seeing what she has to say, because for her to come from the background that she came from and the champion Elon against all naysayers and be in the position that she's in now just says a lot about, first of all, it says a lot about Elon and what he can do to inspire people to step out of either comfort zones for them or to put them in positions where they can be better utilized for him and his companies. But for her to do that interview so early on, we use the platform, so we see all the changes that are happening constantly, and a lot of people don't know, just like they don't know about Tesla because they don't drive them. But yeah, I think that's pretty awesome. I can't wait to watch it.
Yeah, personally, I felt the person that was interviewing very much wanted to catch her and saying something bad about Elon, but I was really because I haven't heard a lot of her interviews, to be honest, and so I thought she did such an amazing job holding her ground, speaking to, because it was almost like they were asking, like, isn't your job kind of more of like a puppet? Like, you're really, Elon's the one doing all the work and you're kind of just here. And no, she said, like, our lanes are very clear. Like he handles all of the technology, where the product's going. And my job is, finance, business operations, and, monetization, partnerships, and all that other stuff. And so it was really, really interesting to see how I thought she did such a quality job in making sure that, she was able to hold her own and say, this is what I bring to the table. This is what Elon's doing. And this is where we're going.
Yeah, I mean, I'll say something that I'll disagree with myself in the same few sentences and then try to pull it together. To me, that's how the media should be interviewing. They should be. She's actually a very good interviewer. She's challenging. She's smart. But they should do that with all their guests. It should be the CEO of GM, the CEO of Ford. And if you just look at the coverage on that network and how they cover different companies differently, then you look at the funding, the marketing, the ad spend that those companies do on CNBC and NBC Universal, it all comes together. So that's what drives a lot of distrust, I think, in media and coverage. But I actually thought her questions were tough but appropriate. And I thought Linda, agree with Alexandra and Joe, like she was just on another level. She understands how to manage that, and it shows you the talent that Elon is putting. That's what I felt good about. It shows you the talent that he's putting around himself, and I thought she did great.
Definitely. Joe, did you want to close us out, man? Because I think my lag's pretty bad.
We are at the ending of it. Thank you, everybody, for tuning in. We appreciate it every week. This is another incredible week. There was a lot of news. I can't even believe we actually got through it all. Please give everyone a follow. We got John, who is at Tesla Owners, SV, and myself at SJV Tesla. Alexandra Mertz, Tesla Boomer Mama. You also want to check out her the business and
the Boomer House,
the Boomer House, and at the Jeff Lutz. Thank you guys for coming by. I know Jeff's here every week, but Alexandra, I really appreciate you stepping in for Amy. We were really hoping to get you on, so we really appreciate it. Thank you, everybody. Have a good rest of your weekend.